closing bell on Wall Street, and now it's Market Domination Overtime. I'm Ines Ferre. We're giving you coverage of all the movers to get you up to speed on the action from today's trade. Markets closing at new highs for the S&P 500. There you see it, the S&P 500 just above the 6,500 line right there. The NASDAQ near highs and the Dow up 0.1%. Taking a look at the market action, we saw that technology was in the green today, as well as energy and communication services. Some of the Mag 7s were in the green: Alphabet, Amazon, Apple, and Meta. Nvidia down 0.8% today. Joining me now is Thomas Hayes, Great Hill Capital Chairman and Managing Member. Tom, a record day on Wall Street. We're seeing that the S&P 500 closed above 6,500 for the first time. A lot of talk about NVIDIA, which has been really the news of the day.
Yeah.
Your biggest takeaways from where this market's at and NVIDIA, we're seeing a record without NVIDIA actually in the green.
Exactly. I think get ready for that theme to continue. I think the laggards are going to continue to outperform, as we've seen kind of in the last 4 weeks. A lot of the most shorted stocks have outperformed. Small caps and mid caps are starting to take the mantle. The unmagnificent 493 are starting to get bid now. Why? Because the unmagnificent 493 earnings growth is starting to re-accelerate from flatline to negative levels just about a year ago, whereas the Mag 7 earnings power is actually decelerating from 33%. This coming quarter will be the first quarter it could be below 10%. So you've had multiple contraction on the 493. That's going to start to expand as earnings grow. You've had multiple expansion on the Magnificent 7. That's going to start to contract a little bit as earnings decelerate. And you saw with NVIDIA, the big story there was data center deceleration. GPUs, for the first time, compute, the core part of data centers, decelerated sequentially 34.1 billion to 33.8 billion. That was masked by networking, but the street's a little cautious on that. And it was a little bit offset by maybe Trump allows them to do a modified Blackwell into China. So the stock held up after the disappointment from earnings. But we have to keep a close eye on that, because that China is a huge figure, and the revenue deceleration from 300% growth rate down to 50% growth rate in a year or so is pretty abrupt.
And it's not much of a dip that we saw today. I mean, 0.8%, but investors do tend to, retail investors at least, buy the dip when NVIDIA goes down. So it'll be interesting what happens there. But I also, we were also talking earlier about Intel as well, and sort of the Intel component to this as well. What's your theory there?
Well, the issue for NVIDIA, the negative sequential growth, is not for lack of demand. They're putting out a great product. They've got unlimited backlog demand. They have a supply bottleneck. They're dependent on the kindness of strangers. If Taiwan Semiconductor ceases to exist or can't give them the allocation, which is the case right now, they're in a lot of trouble. So what they need, the best thing that could ever happen to NVIDIA, is that the Intel deal succeeds and the Arizona 18A node gets online next year to start to produce more capacity of advanced chips for NVIDIA. There's unlimited demand, so what is good for Intel will be good for NVIDIA. Obviously, Taiwan Semiconductor is investing in the US as well to increase capacity. But the reason for that deceleration is their growth. Their revenue growth every quarter is capped at about $4 billion. You're seeing that every quarter. That's not from NVIDIA's orders. That's from Taiwan Semiconductor saying this is all the growth that we can give you, and that's why you've seen that growth rate decline.
What I've been surprised is the leadership that we've seen in this market. I mean, we have seen year to date, we're looking at industrials that's in the green. Industrials is actually the leader.
Yes.
Communication services, tech, utilities, all those touch points that really have to do with AI, with tech, with manufacturing as well.
Yeah, you've got the reshoring theme coming back. I think now that rates are coming down, you're going to see a whole level of new leadership start to come up. Housing's been left for dead. All the building suppliers, all the ancillary players, Autos have been left for dead. The average car on the road is 13.5 years. Now Trump is getting, we've got the steel, we've got the low-cost energy, we've got production going in the U.S. U.S. sell-through has been at depressed levels for the last few years. It's starting to re-accelerate. People need cars. You lower rates, they're going to get cars. Incentives are going up. So I think a lot of laggards now will become leaders, and we're going to see some real opportunity into year-end in small caps and mid caps where you can get double the earnings growth for a much lower multiple.
So is it the rate cuts that is going to propel this market forward?
Yes, I think it's going to propel the rising of stocks under the surface. I think you could see a period of subdued performance for the Mag 7 and outsized performance for the unmagnificent 493. Doesn't mean they'll do bad, the Magnificent 7, just means they'll do less well. And the ones that have been laggards, like you saw this year, last year, industrials, not so good. This year, they're the top leader. The last shall be first. I think we're going to see that in all the interest rate sensitive sectors, the cyclicals, the small caps, the mid caps that people have been afraid to bid. But now that the economy is kind of accelerating, we saw in some of the GDP numbers, they will be good buys.
Some catch up that we'll be watching. Tom Hayes, thanks so much for joining us for this past hour.
Thank you.
And a key takeaway from NVIDIA's second quarter earnings is the cloudy outlook on China. NVIDIA CEO Jensen Huang sat down with Yahoo Finance after the report to talk about being able to compete for that market. Take a listen.
It would be great for China, and we have an opportunity to go capture some of that $50 billion that is growing at about 50% every year. The second largest AI and computing market in the world. America should be part of that. It's great for exports. It's great for our treasury. It's great for American technology leadership. And it enables us to leverage that leadership all around the world.
For more, we're bringing back Patrick Moorhead, founder, CEO, and chief analyst at More Insights and Strategy. Patrick, so much has been talked about China and the sort of uncertainty over that, but we did see, I mean, we were talking earlier about NVIDIA down just 0.8%. How big is this China theme?
So I think macro, even though everybody's talking about it, if I look in totality, the value of NVIDIA, it's small, right? And it's maybe a single digit piece, and that's not insignificant. It is a big piece of the company's growth, but a lot of the action is in the Western worlds where there's actually no restrictions at all.
And what do you think of this deal of 15% revenue for the chips that are sold to China? What are your thoughts on that?
Yeah, so I think it sets a really bad precedent. I mean, companies are already taxed on their profits, so I guess they're paying double taxes on a government service. And the biggest challenge with this too is what are NVIDIA and AMD even getting for their 15%? What were there new resources that were required for tracking that the government made an investment in? And then, you know, even the legality of it is in question, right? Only the House and the Senate can create new taxes. And so it's a little bit unprecedented. In fact, at least with my channel checks, these chip companies don't even know where they might send the checks. Like, do you send it to the Treasury Department? Do you send it to the IRS? What is the basis of it? Is it list price? Is it transfer price out of Taiwan? So, yeah, I think it sets a really bad precedent.
And talking about these types of deals, Intel CFO said that they've received $5.7 billion under the Trump investment deal. That is a little bit of a different deal, but do you hold the same sort of line of thought for that as well?
So they're not doing a 15% on the top. It's a 9.9% equity deal, and that's actually less unprecedented. The U.S. government took equity positions in GM and Chrysler and AIG and even Palantir through the CIA's venture arm. I think short term, to give a boost, and if I look at that converted stock, it does create cash on the balance sheet that they can put against Foundry. So that is a positive thing. I think long term, it just doesn't feel right to anybody right now, even though the Taiwanese government owns 6% of TSMC, and in fact, they were a 48% founder of TSMC. It just still doesn't seem right that when you get government investment, it ends up well. The good thing about this, and I think the way investors should look at this, is there's no voting rights here. So it's not like you're going to have the government pushing them around, vetoing things that might be good for the company and the government just doesn't agree on with the whims of the administration. And I think that should give people a little bit of a better feeling. You know, even the Nippon Steel acquisition of U.S. Steel, they had hooks in there that clearly said if you are going to make certain decisions, you need to seek our approval first. But I think the one thing that I haven't seen yet that I think is the most important thing is that if the U.S. government doesn't put their finger on the scale to put a little teeth into design houses not using Intel Foundry, I think it's going to be all for naught. Intel has the possibility to build 14A based on all this capital, and customers don't show up.
NVIDIA talked about a forecast of $3 to $4 trillion of spend in AI architect until the end of the decade. So my question is, I mean, that's massive. And even one of the analysts brought that up during the earnings call. They talked about also sovereign spend of a target of 20 billion. I mean, what are the sort of themes or areas which seem to be in almost every industry that they can go for that it excites you about this AI theme?
Yeah, so AI infrastructure is a big term for a lot of things, right? First of all, it's hyperscaler data center infrastructure, it's enterprise data center infrastructure, it's enterprise on the edge, right? In factories and retail stores, it's phones, it's every place that you're going to see generative AI. So that number doesn't scare me a lot. Some of the growth areas, right? Funny growth areas behind this, $100 billion, trillion dollar hyperscaler capex is the enterprise data center, which I think will come over time. I think the robotic edge will probably hit before that. Or in accordance with, and I think that is a big boost. The hyperscaler capex number, and I think the NVIDIA number on capex is good for the next 12 to 18 months. Blackwell, NVIDIA's latest chip, is sold out for the next 12 months. So I think we're guaranteed, and listen, I know there's no guaranteed in investments or life. I think that we're looking good for 12 to 18 months. And once that growth starts flattening out a little bit in the hyperscaler data center, we will be looking at other areas of that, including the sovereign cloud. And the sovereign cloud is a fancy name for a very localized version of AI that specific governments want. And will likely be distributed in what we call neo clouds. People like Nebius, people like CoreWeave or G42 or Humane over in the Middle East.
Patrick Moorhead, CEO of More Insights and Strategy. Thank you so much, Patrick.
Thank you.
Coming up, a look at which footwear brands are getting the most popularity this back-to-school season. More Market Domination Overtime on the other side. We are stepping back into the back-to-school footwear shopping scene, and Nike facing some turbulence. The brand's popularity falling to all-time lows, according to Stifel's footwear survey. Here with a closer look is Stifel sports and lifestyle brands analyst Peter McGoldrick. Peter, thanks for joining us. So Nike losing popularity to which makers?
Hi there. Thanks for having us on the show. Yeah, so quick backdrop. Stifel conducted checks at 110 different athletic specialty and sporting goods retail doors. And what we're seeing is Nike's dominance in this space is being tested. Nike's popularity was 38% for the most popular store. That's down 23 percentage points year over year, and the lowest level we've ever seen dating back to the beginning of our checks. in 2008. So that's still a leadership position, but their leadership is narrowing, and we're seeing greater competition from the likes of New Balance and Adidas.
And what is it that consumers are sort of gravitating towards? Is it specific designs? Is it price points?
For sure. So we're seeing greater diversity of style choice than we've ever seen before. And what I point to here is the retro runner craze. This is led by New Balance. It's the hottest part of the market, but it's also the most crowded, with credible offerings from New Balance, Nike, Asics, and increasingly Saucony. So people are moving towards this retro runner style, and the Hoops Classics, which is an area of the market that is dominated by Nike and Jordan, is losing steam.
And what about e-commerce? Because Nike has been big in e-commerce. What's their popularity like there?
Sure. So we actually saw Nike e-commerce increase year over year. And what we believe is going on there is Nike is along the default brand purchase for back to school, but in a physical environment where people can touch and feel the product, there are other alternatives that consumers are moving towards. And again, I'd point out New Balance and Adidas.
Young women, style popularity for young women. Tell me about what you guys have found there.
Sure. So for men, there's more credibility with the Hoops Classics. Women are increasingly moving towards low profile styles, and that would be your retro runners and your terrace styles from Adidas. So women are expressing more breadth of popularity choices as opposed to the default purchase at Nike that is historically dominated.
And did your survey take a look at how often people change their sneakers? I mean, some people wear sneakers far longer than they should, or some are getting sneakers every year. Is there anything that you can tell us about the popularity and if it's like year over year, or how often they change them?
Yeah, we think of back to school as appointment shopping. So this is an annual refresh for many back to school consumers. So we think this is a very important part of the seasonal buying period. And we think that we're getting a good read on what's going to become popular in the future as well.
And are consumers still willing to pay sort of top dollar for a sneaker, or are they looking for markdowns? Are they trading down when it comes to some of these brands?
It's difficult to say, and here's what I'll point to. The most referenced shoe is the Adidas Samba, and that was referenced in 46% of our checks. That sells for $100, but there are also incredibly popular shoes that are gaining popularity at increasing prices. And here I'd point to the Nike Vomero 5. This is a retro runner from Nike. That sells for $170. It sold for $160 last year in back to school 2024. But despite the price increase, it became 20 percentage points more popular than it was last year. So we're seeing only minimal pushback on price despite prices going higher.
And it seems like for a manufacturer, this must be dizzying. I mean, so difficult to sort of follow the trends and which trends are going to really make it big. Are these sneaker trends coming through like faster than ever when it comes to sneakers? Because it just seems like there's such a variety, and it's so difficult to pinpoint what is going to be big and what's not.
That's a great question. What we're seeing is there's a greater diversity of style choice. And so there are four main different styles going on at the same time. So you have your Hoops Classics that are in decline. You have your retro runners, which are on fire. Then you have the terrace styles from Adidas, but you also have contemporary running brands that are driving growth. And I point to Hoka and On here. So there's more going on at the same time than there's ever been before. We typically think of trends lasting 3 years and to peak, from beginning to peak. And so we're seeing some of those become more seasoned than those that have legs. And I point to retro runners that we believe have capacity to grow in 2026. Terrace styles, we think that this may be the peak in 2025.
Peter, thank you so much.
Thank you.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of this break, it's asking for a trend.